trading enthusiast, we have power-packed video ahead. But before we start, we request you to kindly hit that subscribe button, and the reason to ask is you may watch this video and pass on, but you would miss the future videos. But this channel isn't just about trading strategies. It's about cultivating the trader's mindset, embracing risk management, and mastering the psychology of the markets. We'll equip you with the tools and knowledge needed to navigate the ever-changing landscape. Remember, trading is a lifelong journey of growth and adaptation. By subscribing to our channel, you'll stay on the cutting edge of market trends, discover new techniques, and gain valuable insights that can give you a competitive edge. Let's dive in.
Hello, welcome all. Today we will be seeing Martin's strategy scalping technique on BankNifty futures on 3 minutes time frame. First, we will look on the rules and terminology. Signal candle. This candle satisfies all the entry conditions for a valid long and short setups. You may wish to pause the video and note it down. Trade candle. This candle satisfies the trade placement rules of Martin's strategy. It is a candle close above or below the signal candle with valid conditions. This is a valid long setup example where we have all the conditions met for signal candle and trade candle. Once all met, we place a short limit long above the high of trade candle with 1:1.5 risk-reward ratio. Signal candle gives the signal to go long or short, whereas a trade candle gives the confirmation of the signal and presents us entry points. Trade candle is valid only when it forms within the 3 candles after signal candle. These are trade placement models of Martin's strategy. Trade should trigger within the 3 candles after trade candle to be valid.
Welcome to yet another episode of Martin's strategy. So today we will see how the strategy performed on BankNifty in the last week. So we will backtest just 5 days. So we had a tremendous trendy moves on this week's. So we will see how the strategy performed on these days and see. So this is Monday. We will backtest from this to this. So let me just rewind and go to that particular day. We will be using 3 minutes time frame as we are scalping. So this is the end of Friday. So I'll just fast forward and see if we get any valid signals, and we'll backtest. So we'll just take the candle closes as our highs and marking our lows. There we go. We have a breakout signal candle, but there was no valid trade candles here, so that trade was invalidated. So we'll move on. So let me just mark the new high. As new high forms, we will just keep marking. We'll just keep updating our highs. So price is within the cloud, no trades. So one more tip is, when the price is within the cloud, you can execute non-directional strategies like a strangle. Like you can take strike price of above this and below this, and you can just strangle. So let's mark the new high. So we have a signal candle here, trade candle here, but there was no follow through. So that trade was invalidated. So again, we'll mark the new high. So Monday is ended. So we had no trades on Monday. As you can see, the market was just moving sideways. So there was no clear trend. So we just want to catch when there's a clear trend. So we'll mark the high. Let's see, Tuesday. There we go. We have a breakdown signal candle, but here we have a trade candle, but there was no follow through. So that trade was invalidated. I'll just mark the low. Let's see. Here we don't have any trade candles here. So again, new low. No trade candles here as well. Again, new low. So here we have a signal candle, trade candle. So we take a stop limit short. Right below the trade candle, we'll place a stop limit short. From there, we are having a consolidation over here, so we are taking that as a stop loss. From there, 1.5 risk reward. Stop hit. We had a momentum, but it failed and the market just reversed. So we have a stop loss hit of 62 points. Again, the price is within the cloud. As I suggested, you can trade strangles over here, like the cloud formed over here. So from 2 o'clock to 3 o'clock, you could have traded strangle, like 45,800 call short and 45,600 put short. So you could have made some decent amount over here, non-directional strategies. So day 2 ended. So we had one trade, so we lost around 62 points. So day 3, let's see how the strategy performed. Let me just mark the low. So you could have marked this low. We have a signal candle here, but there was no trade candle here. So we'll just invalidate that one. And just mark the lows. There we go. We have a signal. So that's not a signal candle because we are in line, because we have one green in our 10 meters. So that's not a valid short signal. So we will wait for a short signal, which is over here. As you can see, clear bearish candle with signaling a signal candle. So that's our signal candle, that's our trade candle. We place a stop limit short right below the trade candle, and we would wait for 3 candles. So as there was no consolidation in between, so we are taking the previous swing high as a stop loss. From there, 1.5 risk reward. There we go. Let's see. Trade triggered. There we go. Target hit. So we banged around 275 points. So we don't have any valid. We have a signal candles, but there was no valid trade candles. So again, we got a reversal, which we just got saved. Okay, so again, day 4, Thursday. So let's see how the strategy performed on expiry day. So we will mark the lows. Again, we have a breakdown, signal candle. We have a trade candle here. Let me just zoom in and show you guys. So that's a signal candle. As you can see, it's fulfilling all our criteria for a valid short setup. So we have Martin's stochastic trend red, Martin trend mirror, 3 bars red. So that's our signal candle. That's our trade candle. We take a stop limit short right below the trade candle. So we don't have any consolidation in between. So we take previous swing high as a stop loss. From there, 1.5 risk reward. There we go, targeted. So that's a 300 points gain on an expiry day. So let's move on. So again, we have a reversal here. So no trades because the price was within the cloud. Again, the day was ended. This is a Friday. So let's see how the strategy performed on Friday. Let me just mark the high. So we don't have a value big. Let's forward 2-3 candles. So that's so again, we formed a Martin cloud. So that breakout is out. That would mark as a signal candle. So this bottom breakout would mark as a trade candle, signal candle. We don't have a trade signal candle here. That's a signal candle. So 3 candles passed. So that was invalidated. So I'll just mark the high. So that's our signal candle. As you can see, it broke out. So that's our signal candle. That's our trade candle. So we'll place a stop limit long. By the way, we also have a Telegram channel where I keep updating the signals, as you can see. So this was Friday. So I call this signal as the lock signal appeared around 11:06. So that initially hit the targets, as you can see here. That hit the targets. So if you're interested, you can join the Telegram channel. Link is in the description. So here we have a slight consolidation. So we place that as a stop loss. From there, 1.5 risk reward. Let's see. There we go. Targeted. Wonderful trade we had on Friday. Again, let's see. So you can see here we had a signal candle, but there was no trade candle formed. So that trade invalidated and the market just reversed from there. So this way the strategy is designed so that you only catch the trendy moves and no consolidations or no stop loss hunts will be taken. So let's see. There we go. We have a breakdown. So no short signal yet. So I'll just mark the lows. There we go. Then just update the low. So as the price develops, you have to keep updating your lows. Take the previous low. So this is our previous low, candle close. So that's our signal candle. Trade candle. We place a stop limit short until right below the trade candle. From there, we have a consolidation here. As you can see, the price just consolidated here. So we're keeping that as a stop loss. From there, 1.5 risk reward. And that precisely hit our targets. So end of the day, end of the week. So we had total, let's check on. So we had 1, 2, 3, 4, 5 trades in this week. In that, we had 4 wins and 1 losses. So this is how the strategy performed. Thank you. We'll see you in the next video. Have a nice day.